Hey guys, what's up? I just wanted to record this quick video on price around Asia sessions and London close and like the relative relation between them. Yeah, so let's get into it really quick. So this isn't really that much of a set in stone strategy rather than an observation to add confluence and such. Yeah, so I'll get into it. So basically, the theory is that uh, the direction of Asia, right? Let's say here, direction is clearly up, and then London close is usually against it. So London close, you can counter trade it against Asia, and the theory is that this is not really a good enough example to show it, but if there is not a pre-Asia grind down, right, the Asia high usually gets taken out during the day. So let's see where that does happen. So this is a pre-Asia grind down, so you wouldn't get your high taken out during the trading day, but here you can clearly see that Asia's direction is down and then London close corrects upwards. Look, right. So Asia is down, the whole day has been within the Asian range, and then London close corrects upwards against it. So if you are using my strategy with the kill zones about trading this period of volatility, this should add a new layer of confluence to that theory, and also it should help you put your trades in longer, because if London closes up, then pre-Asia might as well be up, right? So where we'd usually get out is maybe here. We'd TP some here and we'd get like a bit of a pullback here, and we'd be done by the end of London close. But with this theory that a London close corrects against Asia, we can have better confluence that we could have closed it here or something like that. So I've marked out a few examples. So yeah, in this case there was a pre-Asia grind down, so you would ideally, yeah, so this is before Asia. So and then if you consider this as the Asia high, it got taken out during our period of volatility. So according to our strategy, which I've covered in the other videos, you would have gotten in what on these candles, right? So this was actually a trade we took live on stream, I believe, that day. So you'd actually get on this buying pressure here, these flush candles here, you'd get in here. So would have played out in your favor quite a bit. But as you can see, Asia here is technically down because you count wicks, right? So this is the first wick of Asia and this is down. So this is overall down. It's very deceiving and it looks like it's up, but it's actually down. So and then since Asia is technically down, right, London close corrects against it. So London close, pre-London close to London close, you see how much of an upward movement we've gotten. So let's look at another example. So and these are all consecutive days and I've just marked them out, so it's not like I'm going out of my way to find examples, right? So here in this case, let's see. So if Asia, pre-Asia, right, see, it's not really a grind down. So this is the like the only this is the only technical movement you've had that's pre-Asia, and it's not that much of a movement. So in theory, yes, London close should be down, and it was, right. You can see the clear lower lows, lower lows. So in theory it was, but if there's not a big pre-Asia grind down, right, it's not worth taking the trade in London close against it. But what we are looking for rather is the Asian high that formed during the day. See, look how perfectly it gets taken out, right? Let's look at another one. Yeah, let's look at this case. So Asia has been a range, right? Look, but and you can see still that even though it is a range, so London close tends to mimic Asia, right? So if Asia was a range, in essence the true direction will remain the same. So if this is down, which it was, right, you can clearly see the lower high and stuff. So in essence Asia was down, but it's just a big chunk of range. So this is also a range, but in theory, right, this is where London close starts. In theory London closes up, we've set a higher high and a higher low before London close ends. So the theory is still valid, as well as the Asian high being formed here, these wicks usually, right? So the Asian high was formed here, and later during the day it got taken out. So this could be used to add confluence to your trades, saying this is the Asian high and it's pretty likely to get taken out, because there's no major structure or anything that's telling you that we'd like go down. And if you've observed, we've also, so this is where coupling of theories comes in, right? So there's a level 1, 2, 3. So in this specific 2 days, you'd know that the like you wouldn't immediately go down, like it's all going to be within your range of here and here or whatever you've marked out. But Yeah, so in this specific case, right, you know that you wouldn't completely nuke yet. Of course, you would, but this ties into our theory of the parts, right? So this is the first peak. There hasn't been a second peak that formed when this was taken, right? So you'd know that it would not completely go down. So you could have added confluence here, saying this is where the Asia high was, right? And most of the like Asia session and London session was all below it. So yeah, you could have simply traded the better chunk of the day and TP'd when Asia high got taken out or something like that along those lines. So this is not much of a strategy in itself, but it's really useful to always add confluence to your trades and see like. So now we've added a new thing where it's an Asia high. So every time we get a sweep of an Asian high, like before London, and then like from now you can observe that the Asia high has been taken out. So the probability of it going much higher than that is not very much compared to it going down. So let's look at another example. So this is a beautiful example. Right, so pre-Asia, what has happened? It was just a range. So this does not really matter to us. But let's test out both the theories, right? In essence, Asia was down, right? So in essence, if Asia is down here, and then the London close is obviously against that, so it would be up. And the second thing is the Asia high that formed, we immediately pumped here, right? And then we formed an Asia high. Most of the trading day was below that, and let's say we were doing our own strategy, right? So if we were going by our strategy, we would have shorted here, we would have taken profit before London close, and maybe we would have flipped long since we filled this fair value gap. So because we know that in essence Asia has been down and pre-Asia has been a range and the Asia high hasn't yet been taken out, we can add confluence that if we get into a long at London close, we can close it when the Asia high gets taken out. So the theory in essence is London close sort of mimics Asia in terms of volume, and it is inverse to Asia in terms of direction. So let's look at this example. So first of all, let's take direction, right? So direction, it is clearly, this is a beautiful downward direction that you can see here towards the end of Asia, right? So Asia is down. So then according to our theory, right, London close should be up. So even if you count it from here, yes, it has been up. And also the theory about the Asia high getting taken out during like whatever period time of the day. I haven't really looked much into what is the most probable time for it to be taken out, but I found that it's to be in this New York to London close, but sometimes it happens during London as well. So Asia high taken out. Yeah, so if see Asia structure is down, so let me tell you how you could have taken a trade here, right? We have our volume indicator here, right? So at this point of time you can see that Asia was down. You are in a good high volume node on our VPVR. So you have volume, you have direction, and according to our theory, London close should be against it, right? At this point of time, Asia high hadn't been taken out yet. So let's say you entered at the POC, right? So if you entered at the POC, you could have ridden all this movement upwards and then close it towards the end of London close. So because you still know that London close will go against Asia and even higher if Asia was down. So yeah, you can add confluence like in that way, and I've found it's been really useful actually for especially our own trades, right, between New York and London close. It's been really like useful for that. Let's look at another theory here. So yeah, so this is the pre-Asia grind down. So it is into Asia, we grind down and we range in Asia. And so either that or we directly start the downward move in Asia, both are still valid. So in a sense, Asian direction has been upright. So Asia direction is up. So what would London close direction be? Yep, it should be down, and it was. And the Asia high that formed, it was here, which immediately got taken out. So another thing that I've observed is London is there, right? So if Asia high immediately gets taken out pre-London close, I mean pre-London open, so immediately after Asia, right? So this is Asia. Immediately after that, if it gets taken out, it's kind of like a liquidity grab for the market makers before they send it down. So they've taken the highest point of Asia here. So Asia here is clean, like it's primed for shorts. All the shorts that have been entered here, right, and whatever they could have done all over here, they've taken it, right? So the liquidity at this point for shorters, the stops who shorted here have been taken out. So this is the Asian range. So people would have shorted here, right? The Asia high. Let's assume best case scenario, you short the Asian high. and then it's been taken out. Like they've come for your stops, and then it's fair game for them to take it down the rest of the day. So yeah, and the Asia high got taken out, and Asia was up, London closes down. So that's how you can add confluence. Let's look at a couple more examples, right? If you can find any. Yeah, this seems to be about the end. So we just look at these examples and we'll call it quits, right? So let's observe this, right? This is the Asia high. Now I want you to answer this with me, right? So Asia, in essence, what direction has it been? It's really clear. There is a high here, right? Yeah, so it's down. Asia's down, right? So Asia's down. So according to our theory, what direction should London close be? Yeah, it should be up, and it is up. The higher lows, and since Asia's direction has been down, London close is fair game to pump how much ever it wants. So let's assume you were trading this day. According to our findings, right, Asia high hasn't been taken out yet. This is all fair game, and there has been no pre-Asia grind down, right? Asia, pre-Asia, let's see, this is Asia. Let's call pre-Asia till here, right? Pre-Asia has either been liquidity build-up or heading into Asia, the high has been formed, right? So it's fair game and a really probable outcome that this high gets taken out, like it's exactly at the start of Asia. So it would have been quite tricky to catch, but see, let's say you've seen this high, right? Asia has come down, Asia's direction in essence was down, so you know that London close would be against it, and the Asia high is still fair game for the market makers. So direction is down here, direction is up here. High hasn't been taken out, you know it will be taken out. So let's say you got in using our strategy, right, between New York and London close, which is where you would have gotten a short here to start with. You would have closed it into London close, you would have taken profit here, and then maybe using these confluences, now we can add a new layer of trading where we also get in at London close, right? Because London close is a time where you can see the counter trading direction of Asia. So once we're done with our post New York or pre London close trade, we also have fair game to get into the London close trade. So that's what I wanted to show you guys today. And even these smaller examples, right, like it doesn't make much sense here, but this is technically still an Asia high, right? It is an Asia high and it got taken out, and Asia direction is clearly up. So let's see what London close did. Yeah, so again, it's not written in stone. Like you will have these outliers where the direction of London close, you could argue that it did go down before going up or whatever, but yeah, you will have outliers. So this is to show that it's not set in stone, but one bad example shouldn't disregard all these. Let's actually count. So that's like what, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18, almost like 25 to 30 days of being correct, right? So it's not that you will use this strategy and you'll suddenly become the best trader ever, but it's just that this adds a new layer of confluence to our theories, and it ties in really well with our pre-London close trades, right, that I usually do on streams. So from the next stream, right, I would be incorporating this, and yeah, we'll see where it goes, guys. But yeah, it's like 3 a.m. right now, and I just wanted to record this video for you guys. So yeah, thanks for watching, and I hope you've learned something, right? So I'll go more into depth about this in my live streams, but yeah, that's it for now, guys. I'm gonna go head to bed. Thanks, bye.